It looks like it was a pretty mixed quarter. So you had a bit of a drop in production due to seasonal factors coming out of the Christmas holidays. But you, of course, had that very strong gold price, that rising gold price, and you also had some tax credits, which helped, I'm sure.
Yeah, a little bit of a different quarter. But if you try and unpack just the production figures, which of course are incredibly important, slight drop in gold production, but the teams managed to save costs. So they reduced their costs in line with the production. So it created almost what you could say a boring quarter when you look at quarter-on-quarter comparisons. The gold price really didn't rise that much. You know, we see the gold price around 1,500, we think, wow. But if you look at the quarter, it was just sort of 1,380, I think, which is not much above the last quarter. And I'm talking dollar price now. In rands, there's a little bit of a difference. So, you know, sort of 2 or 3% difference in the gold price. So it didn't make a huge difference. But it did help, you know, with the lower gold price, lower gold production, improving their profits.
Well, I think you got the tail end of our conversation with Nerina, where she talked about the input costs in rand terms for South African miners being one of the big problems.
Yeah.
You're tackling those costs. How successfully have you been in tackling those costs, and where do you see them going forward?
Stephen, it's been a long-term strategy of ours, as you know, looking at the whole portfolio, really upgrading the portfolio into bigger, bulkier assets which produce more ounces and newer infrastructure. And we've closed a lot of the operations down with old infrastructure, small dispersed operations. So it's really focusing on sort of getting better efficiencies, better productivity, and with that, better grades. And so that's really been our focus. It does take a long time to get into that position, however, but that's really what our focus has been in South Africa. South African operations have the disadvantage in that there are no byproducts. And so, offshore operations often have more silver or copper byproducts, so they've managed to offset some of their costs against those byproducts.
Well, talk to us about the diversification going forward, because of course in Papua New Guinea you do have silver, you do have copper reserves there as well, which you've talked about with the Wafi-Golpu project. As you go forward, how's that diversification going to change the face of Harmony?
Hugely. It's going to change it dramatically. You know, it's really an important issue in our portfolio, in being able to diversify. You know, we've had all our eggs in one basket in South Africa. We've furthermore, if you look further back, had all our eggs in a marginal type basket. Now we're upgrading the portfolio, so that's important. Now the diversification into different countries, but we're also going to have to diversify a little bit more into even some more countries. But Papua New Guinea is a huge part of Harmony's business going forward.
And as you progress with Papua New Guinea, what's that going to do to the cost base going forward? Where would you see that cost base coming down?
Well, if you look at Hidden Valley, when it gets into full production, it'll be one of the lowest cash cost producers in Harmony. If you take Wafi-Golpu, you know, that's got potential of negative cash costs. You know, you put that in with the mix, and the total company looks much better in future, you know, with much lower cash costs.
Shorter term, though, you must be facing a few headwinds. We have Eskom raising its tariffs yet again. You're also going into the winter tariff season now. Would you expect a short-term spike in costs due to these factors, also wages?
Well, the short-term issue of winter tariffs is quite big in our lives, so that adds significant costs. We have managed to, you know, engineers have done a lot of work on saving costs, but, you know, it doesn't recover that full 20-25% increase that we're getting. But, you know, we are working hard on that. So, yes, there are short-term levels of headwinds in South Africa. Wages, you know, we're going to go into that wage discussion soon, probably starting within the month or so. And we'll see what sort of that brings out. But, you know, it's a bit premature to talk about that conclusion. Wafi-Golpu,
you came in and chatted about some of the drill results recently in the studio. Pre-feasibility study expects to be completed by December this year. Do you expect any more pleasant surprises to come out of that? Because this really has excited some of the analysts in the market.
Yeah, it's one of those stories which has really been unfolding, you know, for many, you know, we've been talking about it for a long time, saying it's going to get better, it's going to get better. And we got those good drill intersections. We are going to have a resource upgrade in end of June and announce that in July sometime. That'll set the scene as a little bit of an idea of how big this thing is, but it's growing. It's certainly growing from the drill results. Those numbers will obviously get incorporated in the pre-feasibility study, which will be completed towards the end of December. So that'll give a bit of a better flavour and much firmer numbers in sort of capital numbers, what sort of production rates, what sort of potential cash costs and so on. So it really is an exciting project, potentially one of the better ones in the world.
Safety issues, you do talk about improving safety at all of your operations. We heard from the National Union of Mine Workers this week that they are planning a campaign about safety in the country, and that's going to lead to demonstrations and culminating in a mass one-day stay away towards the end of the year. I mean, do you think this is the right approach, just given the efforts that companies might be making? We are still seeing deaths on mines though.
Yeah, I think safety is our number one priority. Operationally, it's got to be our number one priority, so it's extremely of high concern to us. However, we have to work together to try and resolve these safety issues. It's a long program. We've been busy with it. We've been upgrading infrastructure, been spending a lot of time and effort on training and getting people in the right space and generally doing things. So we do see a graph which is actually looking quite optimistic. It's going in the right, trending in the right direction. So we have to work together, and working against each other doesn't help for the spirit of safety. We're all concerned about safety. It's one issue that we actually all really talk around the same table, but how to get there and how to work on it, that's where we need to do it. I really don't see the advantage of a demonstration. I do see the advantage on having a constructive safety day in trying to look at ways and means of improving safety there.
The gold price, of course, I'm sure you'd like to talk that gold price higher. You were quoted in the wires today saying that you could see it going to $1,800 an ounce next year. What would the drivers for that be? And longer term, do you think we can go even higher than that $1,800?
Well, if you look at, there's some real fundamentals about the gold and gold price. Production, has not been going up. There's been a lot of exploration in the world. There haven't been many good discoveries. So big discoveries have been on the short side. So really, the sort of production scenario is not looking hugely optimistic in the world. If you look at the sort of copper miners, which also produce gold, you'll see that they've been producing slightly lower grades of copper, and therefore the gold is going down in that area. So production issues are not looking really on the growth side. And there's a real need for gold as an investment, as a currency, and that's growing. So, we see lots of demand going through for the physical gold. And so, we certainly see those prices improving. And 1,800, well, in the last few months, it's gone up by $200 an ounce. So, 1,800 is not that far-fetched at all in a year's time.
And even when we see interest rates starting to rise in the United States and kind of really eroding your investments in gold.
Well, I guess all the financial issues and woes of the world are actually good for gold. And then when there's some good news, like latest when we've seen Bin Laden, suddenly things change a lot. But the fundamentals are still and really have been for many, many years that gold is a fundamental good investment.